Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 13th of October. FOMC September minutes, no surprises. The minutes from the September FOMC policy meeting revealed little new information to market participants. Policymakers noted there was a reasonable argument as to whether they should hike at that meeting or wait for some additional labor market and inflation data to validate the move. Additionally, even though several members said it was a close call to hike in September, many noted there were few signs of emerging inflationary pressures. The reaction in the dollar remained relatively limited on the news, probably because policymakers had already communicated most of these points ahead of the minutes. The overall message we got is that the Fed decided to be patient in September, but is very likely to act in the upcoming months if the economy continues to post decent results. Considering that the data after the meeting have been solid so far, with the core PCE price index accelerating in August and the September employment report being decent overall, we maintain our long-held view that the Fed will hike this year, possibly in December. We assign a much lower probability to a November action, considering that meeting's proximity to the US election day, a period which could be marked by heightened market volatility. We would like to note, though, that the risks surrounding the near-term response of the dollar are likely asymmetrical. The market is already prepared for a hike in December, and further positive data will only validate that view. The surprise would be a string of disappointing releases. Something like that could catch the Fed and investors off guard and thereby generate a bigger market reaction than in the case of upbeat economic data. In China, trade data for September missed their forecasts overnight, reinforcing concerns over the economy's stabilization as well as the health of global demand. Exports plunged much more than anticipated, while imports slid instead of rising as expected. The nation's trade surplus narrowed as a result. This led to a risk of market reaction as Asian equities and US equity futures tumbled, while safe haven assets like the yen and gold came under buying interest in the following minutes. Considering that the economic calendar is almost empty today, we could see this pattern continue in case of no surprising events or any surprising comments. As for today, during the European day, the only noteworthy indicator we get is Germany's final CPI for September, and expectations are for the final figure to confirm the preliminary estimate. In the US, initial jobless claims for the week ended on the 7th of October are expected to have risen, which would drag the 4-week average lower. We have two speakers scheduled on today's agenda: Riksbank Governor Stefan Ingves and Philadelphia Fed President Patrick Harker. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.